Good morning. Good morning. Thanks for joining me today on Wednesday, the 26th of July, 2017. It's 9:01 Eastern U.S. time. Thanks for being here once again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market this morning, again, bullish all throughout. We're seeing a push up in crude. Um, Crude popped up on the reopen above the 48 handle, went as high as 48.66 on the September contract, and is steady at 48.40 right now with a very Gaussian, very balanced profile. It's traded sideways between 28 and 42, 48.28 and 48.42 most of the evening. This is on news from Saudi Arabia that further steps are being taken to tighten supply. So it's a fundamental based move there. Crude is followed by the E-mini Dow Jones, by the Dow Jones index up 0.4%. The Euro stocks and the DAX come next at 0.3%. So overall, the market's pretty strong. We're seeing positive stance in the safety instruments as well. The 10-year note is up 3.5 ticks. The Treasury bond is up 4 ticks, and the yen is up 13 pips. So overall, the market's fairly bullish across the board. So gold is the laggard today, down $5 at $1,247.10. Gold's been in balance in this area here for a long time after testing lower. Gold is down 0.4%. As far as what we're looking for today, some of the key elements. At 2 p.m. Eastern today, we get the FOMC announcement on the latest monetary policy. As I mentioned yesterday, the market's pricing in about a 0% chance of any change. There's no press conference scheduled, and so the traders would have to monitor the statement very closely. Other than that, we still in the middle of earnings season. We got AMD releasing this morning, a pretty small company relative to Intel, of course. Amgen, Chipotle, and various others, AT&T and United Steel. All of these were reporting this morning, and we got the API inventories yesterday. Negative 10.2 million versus the expected surplus of 1.63 million. That's where we ended up yesterday on the API after the market closed. That's really it. I won't cover much more on the news front. I'm going to go over what's expected for today. A key figure today that's coming through before the FOMC is the new home sales at 10 a.m. for June, expecting 615,000 units. And then at 10:30, we get crude oil inventories. Crude oil inventories expected at negative 3.1 million, a draw of 3.1 million. Distillates, a draw of 750,000, and gasoline, a draw of 1.85 million. And again, at 2 o'clock, the FOMC rate decision. Let's have a look at what was expected yesterday versus what we got. Here we go. So yesterday's primary hypothesis is that the markets, we've seen this quite a bit, is that the market's not likely to be able to fill the gap in. The gap is down here. It's likely to test lower on the open auction out of range, and then push up and then finish down in the range on the close. Expected a double distribution profile of some sort, and expected the market to push towards 24.85. That's the primary hypothesis. The secondary hypothesis is the market sits sideways for a brief period of time, pushes up, finds its sellers, an impulse down, closes the gap, and starts moving down into the 2469 area before pushing back up, giving us a P-shape profile. And so the market would be responsive in this situation. When we opened, the market was pushing up against the overnight high. Hypo 1 was the one that played out. Here's what we actually got. So we opened, tested down, pull back, perfect touch of the mid here, consolidation zipper. Looked like it was winding to continue higher. It ended up failing lower, so we had the impulse down, continuation. Then we had the correction, higher low. That's the one I always draw in the trader bites, higher low, and then we start to move towards the upper side. We broke the initial balance on the high side, so the market's looking strong. 24.85 is where I expected us to head. Not even close. The range was very, very, very tight for a Tuesday. Just could not get off its butt. 72.50 to 78.75, 6.25 points on a non-holiday on Tuesday in the middle of summer. We did get a double distribution profile, but instead of looking something like this, like I had drawn, it looks something like this. It's really, really tight squeeze. Can't see it in there. And then we left a gap zone underneath, which will be updated in your flex levels this morning. So we left this gap zone again. This area here is one to watch going forward. The overnight session tested through the low yesterday, the 72.50 low, and went 2 ticks through before it rotated back up. Very bullish action as discussed yesterday. The market just continues on its new high tear. So overall, it's, no surprise there. The earnings have been good. There is no bad news, and no bad news is good news, and so we continue higher. So here's the overnight session. Just a continuation of the trade that occurred in the afternoon. Test lower, take out the low by 2 ticks, consolidate, and then as soon as Europe opens, as we've seen here recently, as soon as Europe opens, it starts to push higher. We are against the all-time high, the overnight high right now, and it looks fairly bullish. We have the same situation as yesterday. The delta is positive. Price and volume inventory is long. So we expect some sort of a correction or rebalance on the open, but overall, still a market that is fairly strong, continuing to push all-time highs. Not much more to say about this, other than let's get down to business. So for today, again, the expectation, we're right on the edge of yesterday's profile. We may open out of range, maybe in range. It's hard to say, but overall, we're looking for an open auction. Again, we're against all-time highs. Open auction, I'm looking for responsive as the primary test. Responsive down to about 75. Looking for it to consolidate. Test into this high volume node here again, 75, and then look for a consolidation, and then the market's is likely to try to push the initial balance high again, just like we did yesterday. Right here, I expect the same sort of action, squeeze a little bit, and then settle somewhere in the middle. I'm expecting a fairly fat profile. Again, we have the FOMC at some point, so this is the FOMC point. Who knows where we'll end up at that point. And then from there, it's likely to squeeze higher as the statement is likely to talk about little action from the FOMC on their balance sheet. And that's what the market is paying attention to. That's Hypo 1. Hypo 2 is wishful thinking more than anything, is a squeeze higher that starts out to finish the overnight movement and then starts to rotate down and starts to fill the gap. The impulse down gives us a strong clue that a continuation move is likely. Look for the mid return there, and then a continuation into this consolidation range right here, and then target the 69. This is very unlikely, but there's a lot of energy to the positive side over the last few sessions. Once it starts to dissipate, the weak hands are likely to become sellers, and then we may see an exaggerated move lower. The VIX started to turn up a little bit yesterday. Let me show you that. There you go. The VIX started to turn up a little bit yesterday, so you could see it hit this very, very um, low and has turned up even though the market held new all-time highs. So there's very little room for this thing to pivot lower, but who knows? So those are the two main hypotheses for today. I'll leave you with those. Be creative, I guess. Look for what could happen on 3 and 4. But this is the summertime action. I'm going to be honest with you and tell you that I don't see all that much opportunity in the S&P minis right now. So you're probably sitting there scratching your head, going, "What the heck am I going to do with this information?" Given the tightness of the trade. If you find that you're sitting there being loyal to your plan of exercising discipline, and it's really hard to just sit and watch and do nothing all day long, you may consider looking at a different commodity in the same market sector. So you may consider looking at the Nasdaq, which has some pretty decent rotations still, or the new Russell on the CME, and look to participate in there. Although it's trading about 5 to 7% of the Russell contract on ICE, the volume has not transferred over yet. But they may be good markets to have a look at. There's also the EMD, which is the mid cap. But the S&P is really tight. I mean, 6.5 points. It's hard to do anything with 6.5 points. Good luck today, and I'll catch you tomorrow. Take care.